What is up, everybody? Happy Friday. We have
Happy Friday. Happy Friday, Nate.
on. We have an amazing panel of guests today. The Bank Social team, as always. We got Max Walker Williams. I see you up on stage. Hey, Max, how's it going?
Yeah, boy.
Love it, love it. We have DeFi Girl. We have Mance Harmon. Great to have you all in. I see the Bank Social community filtering in. I see the Hedera community filtering in. Man, this is the place to be.
Absolutely. Let's get Mance and DeFi Girl up on stage.
All right. So Mance and DeFi Girl, if you can request Mike. All right, I see you both.
This is going to be really cool. This is going to be exciting.
Oh yeah.
Hey everyone.
Hi,
Hey,
everybody.
Mance. Hey, Mika. Good morning.
Good afternoon. Happy Friday.
Happy Friday. Oh, it's already afternoon where you are.
Yes, sir. Portugal.
Oh, man. It's like almost nighttime where you are.
Yep. Almost dinner time.
I'm in the Algarve.
Oh, very cool.
Oh, you're in the Algarve. Oh, man. One of my favorite places there, Max. Are you on vacation? Are you on holiday, as you would say,
indeed.
in the Isles?
Not for the next hour. I'm in work with you guys. But yes, I'm in the Algarve on holiday with the family, with the big boss.
Hybrid with the big boss. Hybrid work with the big boss. Fantastic. So we'll give it a few minutes. DeFi girl, Mika, do you want to go over kind of what we'll be covering today and just give some let everybody give some quick I don't think anybody needs introductions per se, but just some introductions to what the topics will be for today.
Sure, of course. Thank you so much for having me here today to help facilitate this conversation. So, for those of you who don't know me, I'm DeFi Girl. I am the community development rep for Hedera at Hashgraph. And something that's really interesting that some of you may not know is that before I was DeFi Girl, I was actually a financial advisor. And so I was very much into the world of traditional finance. And then I saw incredible opportunities in the crypto world and especially within DeFi. And that's when I really got into crypto. And so I'm really excited to be here today facilitating this talk. We'll be covering several topics. Of course, we'll be celebrating Mance joining the advisory board, but we'll also be talking about credit unions and DeFi and distributed ledger technology and how they all can work together in a shared vision. So that's going to be very exciting. So I think we can get started. So we are here today, of course, celebrating Mance joining the advisory board. I'm sure the community is curious. I know I'm curious. I know that John and Mance have a long-standing relationship, so maybe can you both take us back to the roots of where this relationship began and how a shared vision evolved and led to Mance joining the advisory board?
Well, that's a great question. John, I'm not even sure when we first met. What? When was the first time we got acquainted?
Well, you didn't know this, Mance, but I met you in a dream like 6 years ago. No, I'm just the first time we got acquainted was in early 22. Becky and I had just gone to our first credit union conference, and we'll come back to how just this credit union theme has played a part in both of our lives for, kind of the whole DeFi experience. But I was coming back from a conference, the NACUSO conference in 2022, after just meeting Becky a few months prior and her saying, if you believe in this space, you got to come to NACUSO. And we met with Kyle Hopman, who's the chairman of the NCUA. Becky brought us into a kind of a closed door meeting on some really cool initiatives for blockchain. We got Kyle in that meeting. There's probably 6 or 7 of us in there. We got Kyle to agree to amend their proposed regulation or proposed guidance around blockchain to be DLT guidance instead of just blockchain guidance. And then a gentleman named John Ainsworth was there. and brought up the fact that you guys had been interested in the credit union space, and the Hedera chain may be a chain that would work well for what we were looking to do. And I had been following Hedera for quite some time. You guys were just in the process of getting smart contracts, which was something we thought we needed alongside HTS and HCS. And I reached out to you and said, "Hey, we're working on some really cool stuff." That's I think the genesis of our. Do you remember? Did that?
That makes sense. That makes
Yeah.
sense. So you know what? Not many people know. I mean, I've spoken about this previously, but when Lehman invented Hashgraph, this was back in 2015. We were just two guys with no name in the industry, a brand new algorithm that no one had ever heard of, that had not been proven. I mean, Lehman had done some proofs, formal proofs, mathematical proofs, but we hadn't implemented the tech yet. And we needed to get some of that done before we decided that we were going to create a public network. So that's 2015. Keep in mind, Hedera didn't really get started until the fall of 2017 and only became publicly known what we were doing with Hashgraph and Hedera in 2018, March of 2018. There was 2 years there where we actually focused on the credit union industry. And so, John, you mentioned John Ainsworth. There was an organization called CU Ledger. I think it changed its name. John was, years later, John led that organization, and we engaged with CU Ledger to address credit union industry use cases, and we had some success. We went into a competition back then. IBM was really gearing up their whole blockchain division. We competed with IBM for a number of POCs and work to be done with the credit union industry, and we won. Surprisingly to us, we won, and we got some traction, and then we got enough traction where we decided it was time to go and create Hedera. And at that point, we really put all of the credit union stuff on the back burner, and we really just disengaged. But we still had an interest in it. And then years later, as you just heard, John got involved. It sounds like John Ainsworth told you, John, about us, and we connected. And then we've been following and involved with the work that John and Becky, the BankSocial team, have been doing really for a couple of years now. Lehman and I took the time to go to one of the national conferences to get educated on the credit union industry. And at that conference, we met with John and Becky and some others, including Kyle Hauptman, who is the regulator for the industry, and recognize that the industry is maturing. The credit union industry is now open to what we're doing in a way that they just weren't. It just things just were not mature enough at that point. And so we're excited. I'm excited to be back involved in this. We're coming full circle in a number of ways. One, we changed Swirl's names back to Hashgraph. That's one way in which we are coming full circle, going back to the days pre-Hedera, but truly focused on Hashgraph. And similarly now with the credit union work.
Yeah, that's really, it's amazing when you look at how things play out, and I think it's trying to make sense of how things will play out going forward. It's so hard to do that always, but when you look back and you see how things played out and how we've been able to come together and have such a shared vision and have these intertwining of ideas, thoughts, wins, it's incredible, and it's really inspiring as towards the outcomes that we can continue to create in the future. One of the things that you ticked on there was the willingness of the credit union space, from a regulatory perspective, Mance, to be forward looking. And what Kyle says a lot in his public addresses is that they are the only US regulator, at least, that's come out with positive guidance towards DLT, allowing it to generally be used for the betterment of kind of the membership, the people actually using the credit unions, you guys out in the audience. So that's a really powerful statement for him to come out and make, and I think just a testament to us being in the right place, the right time, and then of course with y'all's history in the credit union space, your wins in the credit union space, and then the breaking off to go build Hashgraph and make it what you knew it could be, and then now refolding it back in to bring this power to the people is truly kind of a magical equation that we're so excited to, I think, both be a part of, even with everything we didn't know would happen and is now happening.
Wow, that is incredible, and definitely such a synergistic start to a powerful partnership. And it's really interesting to see how you both were interested in developing regulations for credit unions to empower the people, and then Man sort of branched off to empower the people in a different way using crypto. And I think that's really the shared ethos between crypto, DLT technology, DeFi, and credit unions. So, Mance, can you talk to us about your vision for credit unions and how it aligns with empowering the people in the same way that DLT does?
Sure. Well, first off, if you look at the structure of credit unions and their history, it's kind of like, I'm going to draw an analogy. They were the first DAOs, if you will. I mean, they are a co-op structure, and meaning that people way back when, farmers would come together and pool resources to create something that would benefit the community as a whole. And generally speaking, the more any individual contributed, the more benefit they would get from the organization, the co-op, the cooperative. And in the world that we live in crypto and decentralized organizations and etc., it's really just the same riff. It's the same thing in a different era, in a different context. And so the ethos of both organizations are very similarly aligned. In fact, it's been the case in recent years that a lot of legal analysts would suggest that a co-op, the legal structure that is a co-op, is the right legal structure for types of organizations that perhaps we would want to create. And so there is that. Then 8 years ago, when we first started all this, there were a whole range of use cases that the credit union industry had in mind that would benefit from distributed ledger technology. Loan participation, making it possible for various credit unions to sort of share resources in participating in loans that no single credit union might otherwise be able to handle on their own is just one example. Most of the use cases were internally focused. They were use cases that we were working on were to make it possible for the credit unions individually to work together collectively in a way that they hadn't previously easily been able to do. Right. So it really does go back to this, bringing together a range of participants to create something that's going to benefit the community as a whole. And at this point, in this context, it was the credit unions as a whole, as opposed to the sort of the retail users of the credit unions, the members that the credit unions served. What's changed is that, I mean, it's still the case that there are use cases that would benefit the community of credit unions. And John and Becky and I have talked about some of those and are exploring some of those. But what John is doing with BankSocial really is to the benefit of the retail community. And that's what's interesting, right? Because it's when you get into the retail community and how the credit unions relate, interact with, and serve the retail community that the regulators really care. The regulators didn't care back then, 8 years ago, when we were talking about essentially just a fancy kind of distributed database that had some special security properties. That's fundamentally what a consensus algorithm is. Hashgraph makes it possible to create a distributed database that has security properties, so that if any given operator of one of the nodes in the database wants to change the data, they can. It takes all the database operators collectively to make updates and change the database. So fundamentally, of course, what we have in consensus is just database technology. Those use cases back then were just database use cases done in a special way. Regulators didn't care. Today, regulators care because we're focused on the members themselves. So maybe I'll pause there, John. I think you're better suited to talk about the use cases that the members care about, and why it becomes a regulatory matter, and also why Kyle is open, excited about supporting what we're doing here.
Well, that was a great framework, Mance, for kind of where you guys came from and the core fundamental reasons why there's a perfect match for retail use cases with credit unions. It comes back to credit unions being, we use the term, I coined the term several years back while I was on stage at an event in Miami, analog DeFi. Credit unions are analog DeFi, meaning they operate in a TradFi. DeFi girl, TradFi. No, I'm just playing. They operate in a quite similar way to a DeFi ecosystem. Most of them are small. They can't, they can't de-risk themselves by remaining a closed loop system. So, Mance, you mentioned things like loan participations. The reason why they do that is they need to de-risk themselves. If they're most credit unions are under $200 million. So I think 80% of credit unions, which, by the way, 80% of credit unions serve 130 million users in the United States. Over half of the bankable population is already using credit unions. And so when we look at the reasons why this analog to digital DeFi transformation makes sense, it's because that DAO mention that you just did, Mance, these institutions, they're member-owned banks. They're not shareholder-owned. These are enterprises that match, we think, 100% the ethos of what DeFi is trying to be. I think it is very interesting that a lot of legal minds are coming out and saying that the cooperative framework is the proper framework for this. And we see 130 million people out there who want access to the rails, direct access to the rails. I use kind of the analogy all the time that two people are standing in the same room, they want to pay each other, and so they use some third-party fintech, maybe some neobank or some de novo solution, and it's got to go through 10 intermediaries before we can even share the value with each other. And credit unions, these member-owned banks, when we pair them with these new technologies, because they're reliant on the same tools, right? Their members are reliant upon the same tools. When we can allow that decentralized finance network that exists in an analog way. I mean, literally, when I say analog, when files are passed, when CSV files are passed, or comma delimited files are passed, there are literally people on the other side at some of these institutions hand cranking those files out or dropping those files manually. And so by allowing this analog DeFi infrastructure, this institutional regulatory framework to take a massive leap forward in a way that it's already wanting to do. To your point, man, it's 8 years ago, they wanted to do this. They saw the value. I think the technology was ahead of the curve on, the capabilities yet, just because a lot of the piping hadn't been built between. We now have the opportunity, and we are already, I mean, Mance, we've already got these solutions working in credit unions. Max, I'll go over to you here in a second, but we call these member-owned banks. We have seen major traction in putting the retail use case, every use case, I say this all the time too, there is no business case that exists solely for the purpose of a business-to-business transaction. Every business-to-business transaction, with maybe the exception of the industrial military complex, has a end user, a retail use case that it's powering at the end of the chain. And credit unions, more than any other regulated institutional framework, have the ability and are showing their ability and their need and want to move in this direction in a very fast way. And the tools we're building, the way we're building these tools, giving these guys the ability to turn on these solutions with weeks of onboarding time is really kind of not something anybody else is doing, and a reason why we're getting this massive traction in the space. Go ahead, Max.
Thanks, John. I think, obviously I'm a massive supporter of BankSocial, and I've covered you guys a couple of times. I think it's also important that at the moment, particularly in this fragmented world that we seem to be living
Max,
at the
we
moment.
didn't hear you.
Oh, sorry. Can you hear me? Can you hear
I can
me?
hear him.
I can hear him too.
Oh, great. I can't hear him at all. Thank you, X.
If anyone in the audience can't hear Max, can you put up a sign? Can everyone hear Max? Okay, maybe it's because you're a speaker, Mance.
Okay.
Okay, could somebody just repeat the question?
Yeah, okay.
Yeah,
So
we
basically,
can.
my thing is that it's very important that people understand how important, particularly in this fragmented world at the moment that we live in, how important these institutions are and they're fairer for the community. But before we get into that and before we cover that in more detail, what I'm really interested in is to understand kind of at a more basic level, how did this come about? Is Mance going to be formally affiliating with other use cases?
Yeah, I
in the
apologize
Hedera?
for interrupting. I assume I'm interrupting somebody. I don't hear a thing from anybody.
So
Yeah,
Mance,
Mance,
at the moment,
he's finishing up his question. He's finishing up his question. He's finishing up his question right now.
Okay,
Yeah.
okay. Sorry.
So my question is kind of, can you, I know how you guys met, you kind of covered that, but how did this come about? Because I really didn't see this coming. Is Lehman going to start doing similar things? Is this something that we're going to see more and more of? How did this come about that Mance has, sort of formally affiliated himself with the use case on Hedera? How did that come about?
Yeah. So I think that so the question, Mance, was how did you becoming affiliated with BankSocial come about? I mean, we talked about the history a little bit. It was very basic, a simple thing. Once Mance and the Swirlds team, I think if you guys go, there's a Slack channel. The Swirlds team helps all projects all the time. They are readily available. I see them answering questions all the time in chat, and they're great, right? They get to the bottom of things. They're really responsive on any issues or updates that people need to effectively build products. So I'd say that first. What the unique position we had was we'd been working with the Swirlds Labs teams and occasionally Mance here and there. I mean, Mance, we maybe got together, handfuls of times in the last couple of years. It's not like we were talking on a daily basis, right? And as we got closer and closer to, once Mance pulled away from Swirlds Labs from a day-to-day perspective of running it and appointed Eric, I frankly just reached out and said, "Hey, Mance, with the history you've had in the credit union space and the opportunities you guys have already looked at, and how we've been working together in the past several months, I'd love it if you could come on and be an advisory board member." So I took the initiative to reach out to him, and we worked on it for several months. It definitely wasn't something that just happened immediately. We certainly, though, understood that based on where he was and the experience that he had in the credit union space, of course, in the DeFi space, just with Hedera and what they're doing and the capabilities we get, having him as an advisor with all the prior experience just made a tremendous amount of sense. Not because we just wanted somebody from the DeFi space on our board or just a high profile name on our board. It really went back to the synergies that he experienced in the credit union space and the knowledge, the vast amount of knowledge that he had specific to our use cases in the credit unions that did this. This wasn't just a play to get a big name from DeFi on our board just for the purposes of doing that. It really boiled down to the synergies of the credit union experience that he had. Mance, I don't know if you want to add to that.
Yeah, well, two things. One, in full transparency, this is the first position of this nature that I've taken. So I've specifically not taken board positions or formal advisory positions before frankly, because when you're running an organization like Hedera or Hashgraph, in my opinion, as a CEO, you owe all of your waking hours to that organization. And so while in that role, I simply wouldn't consider giving away part of my time to to other organizations. And as John mentioned, Eric became CEO April 15th at Hashgraph, Swirlds Labs previously. And, even so, most of my time has been working still with Hashgraph and Hedera, and only increasingly have I had a little bit more free time to think about other things. So that's number one. And then secondly, the team that John has pulled together is a high quality team. When I look at the credit union industry specifically and consider whether or not BankSocial has the depth of knowledge, the depth of experience and breadth of relationships within the credit union industry, I was just convinced that they could do it. I was convinced that they have a shot practically of really changing the way that industry works. And so, from that perspective, again, I think that this, I don't mean for this to sound the wrong way, but they sort of earned the opportunity for me to devote hours to help make them successful however I can. I feel like it's a investment worth my time, given the quality of their team and the expected success of BankSocial. So for those two reasons, I decided, yep, it's worth it. Let's go and try to make this work.
Can you hear me now, Mance? No, I don't think he
So
can.
Mance,
No, I don't think
Max
he
is
can.
going to ask another question. So
So
let
my
Max
follow-up
talk.
is that basically you've both said very similar things, which is encouraging, and I do understand what Mance means when he kind of means that you guys, because I believe it too, that you guys have shown that you deliver what you say, you don't overpromise, etc. As far as I'm concerned, and so I do understand what Mance means when he means time is finite and it's important and precious to everybody that has it. So for him to give you some of his is important, obviously, to him and others. But and you're saying there, John, that you're not doing this just for the sake of it. He's not just a name. What does it mean in real terms, like the nitty gritty? What is it you're expecting from Mance in his new role, and what's Mance expecting to get out
Hey,
of it?
I apologize. I'm not
No,
hearing
you're good. You're
anything.
good, Mance. You're good,
I'm
Mance. He's
gonna,
basically just, you want to get off and come back on and
yeah,
try that?
exactly. That's what I was about to
Yeah,
say. I'm gonna drop and
all
reconnect.
good.
Okay.
Yep, all good.
Let him go.
I,
Okay.
I can I can talk through that, Max, quickly. I mean, we've already, I can't, just for confidentiality, I can't talk through some of the synergies we've already experienced just by having Mance's experience on the board, both from a, I think the unique thing, again, I'll bring it back to say that the unique thing that we have with Mance is we're not having to boot up. I mean, the two board members that I'll talk about both of them because they're both in a very similar kind of play. Jack Antonini, the former CEO and president of USAA Bank, which is a massive bank in the United States. I mean, the guy is just a powerhouse in the TradFi, DeFi girl. Did I say that right again? Mika.
Yeah,
So,
perfect.
we wanted to ensure that whoever we brought on, again, this was not, of course, it just so happened to line up, Max, that we got people whose name recognition and brand awareness is tremendous. The sole reason, though, for that, there's a bunch of people that are interested in joining these types of boards at these stages in up and coming financial fintech players. But specifically, the amount of insight and value we've already gained from both of these gentlemen it's been invaluable. I mean, just on the last few calls that we've had, the ability to tap into their knowledge and their network and their experience is already yielding fruits. I can't, again, due to confidentiality, I can't go into specifics. Certainly, though, he's familiar with the credit union space to the point that when we have discussions, we're not having to explain what things mean. I mean, you heard him talk. He understands how the regulations work. He understands that they are close to DAOs. They are financial. I mean, he understands to a very intimate level exactly what these institutions are, and based on his experience, is able to immediately provide feedback. And I think Mance hinted at he hasn't spent a tremendous amount of time, and we're very respectful of his time and Jack's time as well. And that's something that a great team can do is with that experience and with that breadth of knowledge and the ability to think quick, you can literally have a 10-15 minute meeting that is, very specifically geared towards solving a very specific problem. And with the right people on the call, almost almost all the time. I think we had a call yesterday where we had a question. It's like, hey, how would we do this? And then before we finished the 10-minute call, we already had the answer of how we were going to move forward. And those are the differences, I think, to Mance's point, in having as robust and capable a team as we can. We don't have to wait another week to figure out the way we're going to go. We make a decision on those calls, on those quick, touch bases, and then we just move forward. Mance, his question was, what's the practical application for how we think you benefit BankSocial in our touch bases.
But also, what's Mance hoping to get out of it? Like, can you hear me now, Mance?
Yeah, I can hear you. Thank you.
Okay, I hope you're well, by the way.
And thank you. It's good speaking with you again. It's been a while. So first off, I'll just be transparent and say I am not being compensated by John or BankSocial in any way. Right? There is no financial transaction here that's resulting from this. I'm doing this because I think, again, that they have a shot at really doing something transformative for the credit union industry. So that's number one. And what do I get out of it? the satisfaction of seeing this stuff work, right? Seeing this all come to life. And to be honest with you, not a whole lot more than that. It's I'm doing this because I think that John and team are a good team. I think they're good people, and I want to see this industry succeed. And I see an opportunity here where I can contribute and potentially help them. I hope I can help them to be successful themselves. That's it.
I have one more question, if that's okay, guys, because I think it's quite an important one for.
Well, maybe Max, can we? We got a couple other things from we definitely plan to have a healthy kind of Q&A session. Can we get back to kind of the initial questions we wanted to get through, and then we'll save 20-30 minutes, and we can absolutely jump back into it with you. But let's maybe, I don't think there's much more to get through, but we did want to get through a few core questions first, and then we definitely open it back up to you.
Sorry.
No, Max, it's our show, so don't
it's your world.
Confused.
I just live in it. Okay.
Thanks for getting us back on track, John. So what was really interesting that Mance mentioned was that credit unions are sort of formulated the same way that DAOs are, in terms of regulation, sort of recognizing that LLCs are probably the best option for them. And it's very interesting because I remember Mance referring to the Hedera Governing Council as a DAO one time. And so this brings us back to sort of the core values of having the individuals own their assets. So why is it so important for users to own their assets and really be empowered? And how does BankSocial offer that to the users using credit unions and Hedera?
Well, I can speak from that. I try to keep it away from philosophy a lot, and I'll go down a regulatory path, and then I'll let Mance kind of give his thoughts. I'll just set it up real quick. So philosophy, we could talk philosophy all day, why self-custody is better than, and why these systems were created for that. What we can say with certainty is that open banking in the United States, a mandate that's coming down from the CFPB, the Consumer Financial Protection Bureau, they are mandating open banking. And if you look at Rohit Chopra, who's the deputy director of the CFPB, he has explicitly come out and said and you could go find this yourself. I'm paraphrasing a little bit, but the two words that stand out in his statements are open and decentralized. He has explicitly used those two words in his proposed guidance towards open banking. And what we can say is that centralization in open banking doesn't exist in the way it does in the Web 2 world. The security, the need to open up more APIs. These are the kind of current challenges of the Web 2 world, and we can no longer continue to maintain a secure environment proceeding in the Web 2 way. We really need these trustless, stateless kind of, user-owned, data-owned models, because this is what's being mandated. This is what's about to be mandated. The EU has already done something similar. Several countries around the world. So it really, for me, outside of the philosophical discussion of why I would want to own custody, my information, my data, my finances, all that, it's becoming a regulatory thing. So I'll turn it over to Mance and get his thoughts.
Well, I would agree with all of that. And there's one piece of this that I think is really interesting, and that is when, and John, I was not directly a part of this conversation, so I'm relaying what I heard from you. But one of the deciding factors for the regulators was the fact that the retail users in these cases could own their assets and hold their assets. They could self-custody those assets and not have to have the counterparty risk associated with the custody provider. I mean, keep in mind, all of these conversations were happening in the wake of just, at the same time or shortly after the meltdown of the crypto world 2 years ago and what was going on with FTX. And so when Lehman created DREC, decentralized recovery, even long before we had the DREC alliance, we were talking in those very earliest stages of DREC to a handful of people, including John, and the regulators love that, right? They love the fact that you can have the safety net for the retail users and not have the potential problems that we saw with what we saw with FTX. So I think that part of the story here is that decentralized recovery is an enabler and should give comfort to hopefully all the regulators. Banking regulators will follow, starting now with the credit union regulators. And we still need DREC to become an industry standard, making good progress in that regard, but it is a critical component to making this whole thing work. John?
Absolutely. I think that we brought that back perfectly into DREC and that component being a critical part of the infrastructure here. Mance, to what you were talking about that you heard from me, I'll just give a little bit more insight into what that was. Becky had, when Becky was still at the credit union as a CEO of Lone Star, she had what's called an emergency. So they heard about what we were doing. They knew about what we were doing already. We launched it. We launched the stable coin. We launched the proof of reserve system. We launched all that. And they had kind of an emergency regulatory inquiry examination. They came in, they looked at everything. And I think that what you were trying to emphasize there was that when they looked at, they knew about custody, right? They knew about custodial solutions. They didn't really have a lot of information on self-custody. And when we showed them the difference between the two, that's when we saw that they were like, wow. And I think Becky could describe it a little bit better than me, but essentially what ended up happening was they thought all of this was custodial, to your point, super high risk, counterparty risk. Who's the custodian? What securities and safeguards do they have in place? What type of reputational risk would that put on the credit union? Does it put the credit union at financial risk outside of reputation risk? And once they understood that the user, the attack vector was the individual user and not a centralized system, there was almost a sigh of relief in the room, and they were planned to be there for 5 days. That discussion took about 30, 45 minutes, as Becky says. And then for the rest of the 5 days, they were kind of just there learning from Becky the differences between custody and self-custody, and came out of that discussion. It was examiners from the state of Texas, examiners from the federal level, and they came out of that discussion with an understanding that, wow, self-custody should be a way we move forward with a lot of this stuff. Not to say that centralized systems are dying in the next 3 to 5 years. We think there's a place for those systems to also, but do they need to custody my assets? Do they need to custody my data? Do they need to be the record source for my data? They don't anymore. And once they understood that, there was a tremendous shift in kind of their view, their outlook on how these systems can be utilized for better security, more openness, more transferability, more portability, more how do we impact the member? It's by putting the tool in the member's hands and not having a credit union have to have 100 fintechs to support a peer-to-peer transfer when a single chain like Hedera could do 80% of the work. So that's a little more insight into exactly how that came out. And then once we started talking to credit unions about their ability to do DREC, because a lot of credit unions, there's been some new CFPB kind of rules and regulations around charging customers for things like credit card fees and overdraft fees and all these ancillary non-interest income items. And they saw this DREC solution as an ability to help the self-custody movement move forward. Doesn't put them at risk, right? So they're never at risk of losing your keys as a singular failure point. It just can't happen. They're never at risk of somebody breaking the system and colluding to get all the keys to pull them back together. Just can't happen. Really, it's on the member to have a robust and resilient. I don't think there's a more resilient infrastructure than the credit union ecosystem. They literally, I think if we look back at the history a few months back, James McBride, the credit union, the CEO of Connects Federal Credit Union, he put out a fact of there's never been a credit union failure that's resulted in the loss of funds for a member ever in the history of credit unions. And you can't say the same about banks. And it's because banks are walled off. They want all the customers. They want all the data. They want everything. Whereas credit unions are this decentralized financial ecosystem. They pick each other up. They absorb each other. They bring the technology on. And so the likelihood that there would be an event that would result in a failure or a loss, it's never existed in the ecosystem. And we can now extend that to self-custody solutions. And so the additional resiliency in this network of financial institutions is really unparalleled. It's kind of an amazing thing that we've tapped into.
Right. So that's really interesting. So on top of reducing security risks, reducing operational costs, and simplifying operations, self-custody also empowers the people in a way that it brings them financial tools that they may otherwise not have access to. And can you talk to us about how BankSocial is doing this?
So just on top of like our self-custody wallet, which we have in a bunch of credit unions right now, really we're starting to put in tools like RTP, where RTP we pair it alongside HCS. It's paired alongside of our stable coin, and it gives the users, these member-owned banks where the member owns the bank and the bank owns the access to the rail. It literally puts the member at the access point of the rail. So it's the lowest cost, lowest friction, least middleware, intrusive access that you could possibly get as a member, as a user of a financial ecosystem. And we thought that's why we, as a real-time payments, a FedNow solution, integration with HCS, integration with Hashgraph and our stablecoin, it puts the user right at the endpoint of owning the rails. And we think that moving forward as payment systems start to change, I think you already see companies like MasterCard and Visa are changing their models. They're going, I think MasterCard has made a huge push into identity right now. They understand that maybe credit cards as they were, maybe not as much credit cards, but more like the debit card infrastructure where really you're just using the rail to access the money in your account. Credit's a little different because you're extending credit and there's cost to that, and I understand that. But when you're just using a rail to access the money in your account, these systems are evolving, and our solution is evolving them right at the core and putting that, instead of putting 5 or 6 middlemen back in the middle, we are literally putting that at the credit union so that the credit union can put that right in the hands of the member.
Awesome. So I think we have about 15 minutes left to the space. So before I get into the community questions, Max, is there another question you'd like to ask Mance and John?
Yeah, it was just that I think it's really, really encouraging for the community that BankSocial has managed to secure Mance as in an official capacity and as an advisor. And I don't think anyone listening to this doesn't think that Mance won't add value because of everything that John has alluded to. But how do we as a community, and Mance, to be fair, has said that he's not getting anything in terms of financial in return. How do we make it easier for other projects in Hedera to get a watered down version of the same thing? So how do we open roads to and open doors to people that have been in the community for a long time and are looking for those doors to be open to them, and all the positive things that John was talking about that he believes that Mance will be able to do for BankSocial? How do we scale that for the whole community? Mance can't be everywhere, obviously, and he can't be on the board of everyone, obviously. But how do we make it a little bit easier for other projects to capitalize on?
Well, Max, that's a great question. So, before Mance answers it, I'm available too. Like you said, Mance can't be everywhere. I can't be everywhere. Becky can't be everywhere. We can be some places. I think to Mance's point earlier, as a CEO of organizations, it's doing a disservice to your organization if you spread yourself really thin. What we can say though is, without traction, it's hard for just somebody to come in and say, hey, look, I started yesterday, I need an advisor, and then somebody who's got all these things that they have to prioritize and look at, to say, okay, well, just because you asked, let me go over here. For me, if I'm looking at who can I help and who can I not help, I can help people that have demonstrated their ability to gain traction, have a roadmap towards additional traction, and I'm just a fuel that can be poured on a fire that's already burning brightly to help the fire burn brighter. And so for me, when I evaluate my ability to help companies, I have to do it through that lens, because I get asked by so many people, and they all love all of them. Everybody thinks they're going somewhere, and everybody has the opportunity and possibility to go somewhere. Really, what sets you apart in that question asking process is traction gained. How bright is your fire burning, and how can I pour additional fuel on that fire to just get you more traction, not to help you get started and initial traction. So, I mean, that's kind of my perspective on it. But Mance, I'll let you chime in there.
Well, it's a really good question. And to be frank about it, it's not one that I've previously thought deeply about, simply because there hasn't been the opportunity. I mean, obviously, there have been a lot of opportunities for me to be on boards or in an advisory role, but I've just had a simple policy of no until now. And so the fair answer is, I don't know. I don't know how you scale that, and I don't know what a good policy is. To think about how to prioritize, that opportunity. I'm all ears, by the way. So Max, I mean, we can have a conversation separately, and if there are ideas about how to do something along these lines, it's certainly worth digging into and thinking about. And what John has said is true, right? I mean, there has to be a filter, and that filter quite often is, has there been demonstrated success? Do you believe that there is the opportunity for this group to really make the difference that you hope, that they hope that they'll be able to make? All those things would have to go into it. But outside of that, Max, it's a great question, and it's not one that I've again gone thought deeply about, but it's worthy of that.
It's one I think about quite often, and I appreciate that you haven't been able to, and that's been really important. It's important that you haven't, because I agree with John that you shouldn't spread yourself too thin, and you need to, be the thin edge of the wedge while you're driving something forward. But now that you moved on to new pastures, I think it is relevant. But But for clarity, I also agree with there has to be a barrier to entry, of course. You can't be day two, like John said, and it's just people coming in going, right, Mance, I want you to introduce me to everyone you've ever met and give me your good name and vouch for me. But I do know that there are people in the community who are time served and are deserving, in my opinion, of a shot, but for different reasons haven't had that. And it isn't always their own fault. And of course, tenacity and never giving up and all that stuff comes into play. But sometimes you just need the right person, kind of like a who you know, not what you know sort of situation, to make the right introduction at the right time, and then the ignition is go. So it'd be a really interesting conversation. I'd love to have with you at some point in the future, Mance, on behalf of the community and the projects that I think do warrant, at the very least, a conversation.
Of course. I think it's a great conversation to have. We'll connect after this and get it set up.
Max, that's a great point. I also agree. I think the community needs a lot of support, but I think it's also really important to consider that alignment is so huge when forming these partnerships. And obviously, Mance and John have incredible alignment and synergies in the past that have led to this partnership. And Mance has made it abundantly clear that he sees a lot of traction with BankSocial. And this leads us into one of the questions from the community for Mance. So, Mance, how do you see okay, now, John, correct me, is it DeFi or DeFi Federal Credit Union playing a role in the mass adoption of Hedera moving forward?
Well, so what I think is that DeFi, it is DeFi, by the way, as opposed to DeFi. And what I think is DeFi has the opportunity to demonstrate a new model in such a way that if it's successful, then it should be replicated and will expand. So we're talking about the credit unions here today, and we're talking about BankSocial and DeFi. But look, success breeds success. And if that success has been had on Hedera, and then we grow from there into banking, which is absolutely where I think this would end up going, then we're not just looking at credit unions, we're looking at the banking system. And all of that could end up, hypothetically, hopefully, optimistically, could end up on Hedera. So it's a great use case. John and team have been Hedera first in everything. I think that's good for Hedera. If they're successful, I think that's good for Hedera, and it's only the first of probably an entirely new model for the industry.
And I would back that up by saying, we initially saw DeFi as a very interesting use case for the reasons that Mance just explained, i.e., creating a framework that credit unions could see working. What I'll tell you though is over the last 6 or 7, 8 months, the credit unions are just picking up on all these tools and implementing them. And so it's more about, to Mance's point, demonstrating, like creating a working ecosystem. The credit unions are doing it themselves though. So is it more important to have one credit union that shows the way, or is it more important for credit unions to adopt these practices so that, like Mance said, I think one of the things we also hear from Kyle Hopman all the time is that when regulators look at if they should be the first answer is almost always no. But when you have an example from another regulator, even if it's from another country or from another jurisdiction, come to you. So we are working with banks. There are banks in our pipeline and in our potential ecosystem. When they have use cases that another regulator has approved and that is working to no detriment, the ability for them to walk in and say, hey, our partners on the other side of the aisle have this guidance, have these tools working. It's a much easier conversation with the regulator. And I think a lot of that too is education on, a lot of times the regulators, when they hear things like crypto, when they hear things like DeFi, when they hear things like blockchain, they kind of just automatically put up a barrier. That's why we use the word distributed ledger. And when we explain what is actually happening, we say, you went from spreadsheets to databases, and now you're going to multiple databases that can't be colluded against and that are immutable, and they just understand it better, and they're like, oh, that's all this is. Well, build away. And so DeFi becomes less and less important. And I think we have a couple credit unions that are launching our wallet here in the next few weeks. I don't want to say imminent. I don't want to say about to happen. It'll happen when it happens. You're on notice, though, that these credit unions have already have all the tools. It's ready. It's integrated into their ecosystems, and now they're just deciding when to start marketing it. But it's more important to have a lot of credit unions using it as opposed to just one. So I would say DeFi as a tool, its importance has kind of been diminished by just getting this massive traction with all of our other credit union partners that eventually, to Mance's point, can be leveraged into the American banking system. And we're even working overseas right now. And Nindya is one of our board members. He's down. We'll be talking with him next week on the next spaces. But, that's the next phase of this is taking this cooperative model, this banking model, into other jurisdictions around the world.
Thanks, John. So I have one more question, and this will lead the community to understand how they can get more involved with BankSocial. But before we wrap up, I'd like to thank everybody in the community, the BankSocial community, the Hedera community, for being here today. It's always great to see everyone up here. And let's support each other. So if everyone can go ahead and just follow everybody on the panel, we'll help each other grow. We will grow together. And speaking of growing together, John, can you please talk to us about your DAO and how community members can actually get involved with BankSocial and what it means to own BSL tokens and be a part of the DAO?
Sure. And we've got a lot of conversations on that. So I'll just give a brief high level. The DAO has been a really cool opportunity. It's a Wyoming LLC that's been formed for several years. It's run by a group of voted in delegates, very similar to the council. Actually, the similarities are it's quite interesting, the similarities, even before we looked at what the council does. But we've already got several loans in place. I think another big one that the delegates are looking at right now just came through. Certainly all the voting that's happened on chain, the ETH migration, there should be an announcement coming out here right after this call, if not already. We just got another Apple push through that we've been waiting on for almost a month to go through, and that just got pushed yesterday. But the DAO is a way for the community to be involved in these kind of self-replicating, self-governing tools. We've got our chat room. We've got, of course, all of our social spaces that the community can get involved with. The token holders have the ability to vote and self-govern on the Gov site. As of today, a lot of the use cases that we have will be made. The purpose for moving to Hedera was to eliminate kind of the restrictions that an Ethereum network would have on our ability to move faster, get more people involved at lower cost. And so now that we've got the transition finalized for the move for everything to be on Hedera, we can start opening up a lot more of the use cases that have been kind of proposed by the community that the community has kind of voiced opposition against because it just wouldn't work on Ethereum. And so we're at a really exciting point of the DAO and of the community and of the ability to really start ramping up the use cases. Staking is the next thing that we just had to be on Hedera before we could get the full staking use case out the door. So it's a really exciting time. I think what we're planning on doing is spaces. We're going to announce the ETH migration and the airdrop, and then staking and a couple other things coming up after that. And we'll have another spaces to specifically cover all those here in the next week and a half, 2 weeks.
That is very exciting. We are all looking forward to that. So thank you again to the community for being here today, and to John, Mance, and Max, and the BankSocial host. Thank you for your precious time. And to BankSocial, congratulations on acquiring a fantastic new member to your advisory board. And we will see you on the next space.
Thanks, everyone.
Thanks,
Talk
everybody.
to you soon. Yep.
Thanks, Mance. Thanks, everybody. Thanks, Max.